Vineet Bhattagar, Managing Director of Phillip Capital, joins us live. Vineet, good morning. Thank you for joining us. Vineet, if I look at how Indian markets have moved in last 15 days, the Nifty clearly has done precious little. Looks like benchmark indices are stuck in a range and there is no thrust on either side of the range.
That's true, and it is also visible not only in the obvious range that you just mentioned about, but also in the implied volatilities for the next month, that is February series. The implied vols for Nifty are just about 13%, which is very asymptomatic of what actually is happening to the rest of the single stock universe. Whether you look at the front line or the second line stocks, they have displayed tremendous amount of movement as well as volatility. And February being a month which is going to be full of expectations and event, we believe that Nifty is going to come out of this range that it has been trading in right now.
Vineet, when you say come out of the range, do you mean on the upside or the downside?
I'm biased towards the upside, primarily because it is going to be a period where there are going to be announcements, and there is great expectation about the budget being one which will be very indicative of how the policy reform will be taken forward in the next year or so. And in that respect, I would imagine that the current sentiment that the overseas institutions are showing, wherein they are ready to move the weightage to Indian market from neutral to a bit overweight, would only mean that the bias should remain up and 6100 should be taken off.
So for those who are directionally betting on a long trade, should they roll over the long positions into the Feb series?
Yes, at the same time, one needs to be selective about what one is rolling over. There is some short-term negative momentum that is visible in some of the names. For example, we saw that it was visible in the PSU banks yesterday. There are results that are going to be coming out today and next week. So one has to be selective about what one is rolling over on the long side. But by and large, the front line and the sectors that you believe would do well as far as the policy making is concerned should easily be rolled over on the long side.
Vineet, how would you approach the entire banking pack from now to the budget with the commentary that we've seen from the Reserve Bank governor this time, indicating that there are only further rate cuts in store? How would you approach the banking sector?
I guess all of us have been aware about this particular approach. So yeah, it clearly does not come more as a surprise than perhaps a reiteration of what we all believe, that the peaking of the interest rate cycle happened about 2-3 months ago. It was only on the back of some visible cooling off as far as headline inflation is concerned, or commitment to reduce the fiscal deficit from the center is concerned, is what the central bank was waiting for. If, as finance minister has been elucidating during his overseas roadshows, were to come about, and the math does work out for a 5.3% fiscal deficit as a percentage of GDP that he is expected to present during his budget speech, the central bank and the governor are going to be only far more motivated. And therefore, it is only natural that the interest rates should continue to come down going forward. At the same time, to look at this as a panacea to all that one has looked at as far as banking sector is concerned is going to be a very simplistic approach. One needs to do the stock level analysis And one needs to differentiate, between a PNB and a Bob Capital and an OBC and an Axis and an ICICI. So there is no getting away from that particular factor. If one wants to take a long position on the Bank Nifty index because it is going to break the resistance of 12,800, that may be a simplistic approach. But if you're talking about including them in the portfolio as single stocks, you need to do an analysis as to what should be bought.
Vineet, several investors are of the view now that the recent outperformance in Indian markets has come on back of expectations and hope, and it has not come because of a concrete implementation or because of earnings upgrade, and it's a matter of time. Fundamentals will haunt us.
But that's the way the markets behave, and that's the way the investors behave. Investors behave in anticipation of a positive outcome, and when the dice is loaded where 6 out of 10 times the chances are that things will turn out good, you go long. Right, so that's the way investors would always behave. If it were not to go right, I think the positions reverse. So there are few, and it always happens in case of retail customers, that they come in only when the news is out and perhaps the game is over.
Just want to get the point that you were earlier making about banks, Vineet. How would you approach the banking pack individually now? And which stock, according to you, is something which is a clear buy signal right now? And what would you sell?
I would remain overweight on the private banks as against the PSU banks, as I'm looking at a continuation of, shall I say, the rally that has, that has now started looking at, looking at all of us. I'm looking at from the point of view of a portfolio construction, and therefore I would have all the three private sector banks in the portfolio, i.e. ICICI Bank, Axis Bank, and HDFC Bank. There will be an exposure to SBI, but other than that, exposure to the PSU lot needs to be reduced or not at all.
Why are you insisting that the exposure to PSU banks should be reduced? Because PSU banks are cheap, bond yields are supportive, and if your view is that economy will turn around, then historically we've seen that every time when the economy turns around, it's the PSU banking space which benefits the most and the fastest.
Yes, if the tide rises, all boats go up. There is no doubt about that. And if there is an overall underexposure to the PSU bank as a pack, clearly the PEs will remain subdued, and the benefit of the rising tide will clearly be visible to the traders. So from the trading perspective, if one were to look at getting into PSU bank, I guess that has to be timed tactically correctly. But from the investors or the portfolio manager's point of view is what I was mentioning about. So tactically you could be correct. If the tide does go up, and there is visibility of the PSU banks also getting everything right in their in their business models, I guess you could take trading exposures to them. But sitting today, I would look at only private banks.
How would you map how exactly would you map this month's volatility in Tata Motors? It was sitting at 330, then came the profit warning, it cracked below 300, came down to 270, and from 270 to 280 levels it has recovered to about 300 once again.
Yes, but if you look at it, this is exactly what has happened even earlier. This particular range of Tata Motors, shall I say 250 to 350, has actually become the range that we have looked at not once. And therefore, from the trading perspective or from the technical chart point of view, these do become therefore the obvious floors and the resistances that the traders are looking at. Therefore, when it moves from 330 to 270, it is because the entire market is perhaps looking at that figure of 270 or 265. Likewise, on 330 or 350 side. The auto sector as a whole, of course, has been underperforming. Tata Motors in particular, both on the back of the results as well as the last 2-3 months performance has been volatile. And the point that I made earlier, that the volatility of the underlying stocks, some of the frontline stocks, is not visible in Nifty, is only proven by the point that you just made.
Vineet, what about real estate? Because fundamentally two things seem to be now shifting for the sector in expectation of what really may be coming about in the budget, project approvals, and of course interest rates easing as well. Do you think there's further headroom in names like an HDIL or a DLF for that matter?
Yeah, I guess those are exactly the two names that I wanted to bring out as a contrasting performance on the back of a backdrop of interest rate easing and economy picking up, and therefore construction stroke reality doing well. So on one hand you have DLF, which has shown strength, and there is HDIL, which has not shown. And therefore, will there be a situation where on the back of an overall upbeat momentum or upbeat sentiment, HDIL will catch up as against what may have happened or has already started happening to DLF? It's quite possible. But if one were to again look at it from the point of view how you are going to and what you are going to include in your portfolio as far as the next 1 year, 1.5 years is concerned, you have to do the stock level analysis. So, I guess it's really boiling down to the fact that while the market may be looking good, positive, and there may be some good policy reforms that may come about our way, as far as center is concerned, we still cannot take the approach of buying 4 stocks in a particular sector and keeping tight and sitting tight on it. You need to do that analysis, and I think the time has come to take the more difficult route of doing the stock analysis.
It was HUL and now it is clearly Colgate. Colgate came out with numbers yesterday. Numbers were not all that impressive. Margins have come under pressure. Colgate today has also collapsed by about 15-20 rupees. It's interesting to point out that even though many of us are of the view that the India romance is about owning consumption names, but the fact that top FMCG companies are reporting a contraction in their volumes. So volume is not growing at the inflation rate also, which means there is some degree of slowdown now, which is impacting disposable stroke FMCG sales. Vineet, you also track the leverage part of the market very closely, and for the week gone by we saw several casualties because of the leverage impact. HDIL, IVRCL, we saw some selling in Mindtree. What's happening to the leverage part of the market, and in general are markets nervous about buying or owning stocks where the promoter holding is significantly pledged?
I guess it is the smart investor who would do that analysis, and it is indeed a factor or an item that one should look at as to how much of the promoter or ownership is actually borrowed against. So it's a number that one keeps track of if you are a smart trader or a professional trader, and that may clearly decide and dictate what your trading position could be as far as those names are concerned. So you're quite right. Market tracks it. Market knows what it means, and market punishes it if need be in terms of reducing their exposure.
Even though markets, they love to hate Suzlon, the fact of the matter here is that Suzlon this year has appreciated by about 20% plus. As we speak today, Suzlon is up 6%. 15 minutes into trade, or I wouldn't say in 15 minutes, 10 minutes into trade, it has clocked volumes of 18 million shares only on National Stock Exchange. What's happening there, Vineet? Do you think Suzlon could be the next Wakada United Spirits in making?
Yes, in the sense and to the limited extent that when there is negative news around a particular stock, I think all of us move on the street in a herd. And I'm not saying something that is unique or for the first time, but that's what it is, the magnification of a negative item, and as much it is for the positive item is is a phenomenon that we have seen umpteen number of times. So when there was a negative sentiment around Suzlon, everybody,
Right.
his neighbor and his dog was all over the stock. But the company, of course, always had a business model and a business plan,
So, Vineet,
and
you're
has
making a
perhaps
case.
put its act together.
So, Vineet, you're making a case that it is not herd mentality which is driving Suzlon. You're of the view that the business now has genuinely turned the corner, and the fact that the CDR has got approved, we could be in better days for Suzlon. So my follow-up question is that do you personally own Suzlon? Are you recommending your clients to own Suzlon? And what is your price target for Suzlon?
I do not personally own Suzlon. We have not recommended Suzlon, and I do not have a target for Suzlon. But I was just sharing with you what many times happens to some stocks.
So what do you own personally? What are you buying right now? And what are you recommending to your clients? Give me a stock idea. Give me a multi-bagger idea.
Multi-bagger. Multi-bagger is difficult because, a lot of them have already moved quite substantially. But of course, I am a fan of the frontline stocks because I think they capture the India story the best. I would obviously continue to remain long on several sectors, and there is no single sector that comes out as my favorite. So I would put my money on a construction and selectively on bank and autos and construction and materials and FMCG. So you need to have a portfolio such as what I'm saying.
Vineet, if you give such an advice to your client, you'll not get business. You got to tell me something specific.
No, we do get business because they do increase the coverage and overweight on India. But of course, if you are asking to me as to what will be our ideas, they are actually a bit on the negative side, especially for today. So I'm a bit negative about names like Infosys in the short run. I'm a bit negative on names like Tata Steel, Bank of Baroda, Oriental Bank of Commerce, Z. These are the numbers which are looking, these are the counters that are looking a bit under pressure to me this morning.